Welcome to this edition of Ethical Sustainable Investment News and Analysis to Profit By. I'm Ron Robbins, an ethical investing pioneer for over 40 years, quoted in the Wall Street Journal, MarketWatch, the Globe and Mail, and numerous other media, and founder of the highly respected global ethical sustainable investing information website, Investing for the Soul. And please listen to my disclaimer statement at the end of this podcast. Now enjoy this podcast. Hello, Ron Robbins here. Welcome to podcast episode 47, published on December 18th, titled Analysts, ESG Stocks to Buy, and presented by Investing for the Soul. Investingforthesoul.com is your site for vital global ethical and sustainable investing news, commentary, information, and resources. Remember that you can find a full transcript, links to content, including stock symbols, quotes, and bonus material at this episode's podcast page located at investingforthesoul.com/podcasts. And Google any terms that are unfamiliar to you. First, we start with a big list titled 15 Stocks to Buy as the ESG investing boom continues into 2021 by Callum Kuhn. It appeared on the barons.com site. Quote, "The sustainable and ESG investing revolution is set to continue in 2021, with investors looking for the next wave of opportunities," Morgan Stanley's strategist said, as they revealed the 15 stocks to buy. In Europe, they chose energy technology company Siemens Energy for its exposure to renewables and gas, as well as German chip maker Infineon, given its commanding position in power semiconductors used in electric vehicles. Germany's Covestro also featured as a leading producer of rigid foams used as insulation in buildings and increasingly in electric vehicles. In the US, they liked global energy company AES, citing its transformation in developing renewables and storage, and automobile parts company Aptiv for its growing focus on electric vehicles. In Asia, they selected electric vehicle battery manufacturer LG Chem and solar wafer producer LONGi Green Energy Technology. These strategists also picked 5 stocks relating to sustainable consumption, with governments turning their attention to food and agriculture. Their picks included agricultural equipment manufacturer Deere, South Korean food company Cheiljedang, and China's Bluestar Adisseo for its products providing nutritional solutions for animal feed. Aluminium beverage can producer Corp and Thailand's SCG Packaging also made the list, offering alternatives to single-use plastics and packaging. Finally, they highlighted 3 stocks as a way of playing the overall structural growth theme of sustainability and ESG. Asset manager Amundi, testing and inspection specialist Bureau Veritas, and US data analytics company Verisk for its climate data offering. End quotes. Our next article continues with the alternative energy stock theme. It's titled, "Got $5,000? Here are 5 energy stocks to buy and hold for the long term." Matthew DiLallo, the article's author, says these companies are leaders in the energy transition. It was on the Motley Fool site. He says the following about his picks. Quote, 1. Atlantica Sustainable Infrastructure owns a globally diversified portfolio of infrastructure assets backed by long-term fixed-rate contracts that supply it with predictable income. The company currently gets 69% of its cash flow from renewable energy assets. Atlantica targets to invest $200 million to $300 million per year to expand its portfolio, which should enable it to steadily increase its high-yielding dividend. 2. Brookfield Renewable. The company is a global leader in operating hydroelectric facilities, 64% of its cash flow, which it complements with fast-growing wind at 27% and solar energy at 9% platforms. The company anticipates increasing its cash flow at a double-digit annual rate through at least 2025, which should support 5 to 9% annual dividend growth. 3. First Solar is a leading manufacturer of thin-film solar panels, ideal for utility-scale solar energy projects. With solar panel demand expected to double over the next 5 years, First Solar is in an ideal position to capture this growth. 4. NextEra Energy is the world's top energy producer from the wind and sun. Meanwhile, the company is also an early leader in emerging technologies like battery storage and green hydrogen. Add those factors to its legacy utility operations and 1.9% yielding dividend, and NextEra is one of the lowest risk ways to invest in the future of energy. 5. SolarEdge Technologies makes power optimizers and inverters that help lower the cost of energy produced by solar panels. With a cash-rich balance sheet, SolarEdge has the financial flexibility to continue expanding so that it can stay ahead of the technological curve and capture a sizable portion of this growth. End quotes. For most ethical and sustainable investors, many infrastructure stocks will qualify as investments. And given the prospect of massive infrastructure spending planned by governments globally, it might be worth considering some of these companies. Here's an article titled 12 Best Infrastructure Stocks to Buy Now that might assist you. It's written by Mayak Almario and appeared on the Yahoo Finance site. Mr. Almario says, these are the most popular infrastructure stocks among the 800-plus hedge funds tracked by Insider Monkey. I'll mention a company and then provide a brief quote from him on each one. Working towards the number 1 spot, we start with number 12, Fastenal Company. Fastenal Company is an industrial distributor based in Minnesota. The company markets industrial, safety, and construction supplies. At the same time, inventory management, manufacturing, and tool repair. 11 is Acuity Brands Inc. The company manufactures innovative lighting products, controls, software, and services. Acuity Brands is one of the 10 new stocks billionaire Ken Fisher just bought. 10. Martin Marietta Materials is one of the leading suppliers of building materials, including aggregates, cement, and heavy materials. 9. AECOM is one of the top infrastructure firms in the world. 8. United Rentals Inc. United Rentals Inc. is one of the world's largest equipment rental companies. It's a relatively popular stock among hedge funds, but hedge funds have been taking some chips off the table throughout 2020. 7. HD Supply Holdings Inc. is an industrial distributor in North America. Unfortunately, it may be a bit late to buy this stock now. Recently, the Home Depot Inc. announced its acquisition of HD Supply Holdings in an all-cash deal for all common stock at $56 per share. The acquisition is expected to be completed on January 31st, 2021. 6. Vulcan Materials Co. The company is engaged in the manufacturing of construction materials, gravel, crushed stone, and sand. 5. Rockwell Automation Inc. provides industrial automation and information technology. 4. Norfolk Southern Corporation. Northern Southern Corporation is one of the nation's premier transportation companies with headquarters located in Atlanta, Georgia. 3. Kansas City Southern. Kansas City Southern is a Delaware-registered transportation holding company with railroad investments in the United States, Mexico, and Panama. 2. CSX Corporation. CSX Corporation is an American holding company focused on rail transportation and real estate in North America. And finally, number one, Union Pacific Corporation is the best infrastructure stock to buy now. The company is a freight hauling railroad that operated 8,300 locomotives over 32,300 miles. End quotes. Now, this is an interesting new sustainable equity ETF. It's covered in an article by Aaron Newworth titled JP Morgan Launches Carbon Transition Equity ETF, JCTR. It appeared on etfdb.com. Here are some key quotes from Mr. Newworth. The fund will track the JP Morgan Asset Management Carbon Transition US Equity Index, built to achieve a meaningful reduction in carbon intensity without relying on exclusions or sector deviations. JCTR will seek to offer investors at least 30% less carbon intensity than the Russell 1000 index. This article originally appeared on etftrends.com. End quotes. Now to some exciting new fixed income entrants. They are reviewed in an article titled Robeco Launches 2 Climate-Focused Fixed Income Strategies. It's published on theasset.com site. Quote, Asset manager Robeco has launched 2 climate-focused fixed income strategies, the first of their kind to be fully compliant with the European Union's benchmark regulation for Paris-aligned investments. These are Robeco Sam Climate Global Credits and Robeco Sam Climate Global Bonds. Robeco Sam Climate Global Credits invests globally in corporate bonds with explicit climate targets that contribute to the goals of the Paris Agreement. Robeco Sam Climate Global Bonds comprises a global aggregate portfolio of fixed income assets. The strategy aims for a lower carbon footprint relative to the global investment grade bond universe and an average of at least 7% decarbonization per annum while outperforming its Paris-aware benchmark. End quotes. Well, these are my top news stories with their stock and fund tips for this podcast. Analysts, ESG Stocks to buy. To get all the links, stock symbols, or to read the transcript of this podcast and more, go to investingforthesoul.com/podcasts and scroll down to this episode. Also, be sure to click the like and subscribe buttons in iTunes, Apple Podcasts, or wherever you download or listen to this podcast. And please click the share buttons to share this podcast with your friends and family. Let's promote a better post-COVID world through ethical and sustainable investing. Contact me if you have any questions. Stay well and healthy and conscious about the ethical and sustainable values of your investments. Thank you for listening. And might I add, this is an ideal time over the holidays to really introduce the whole concept of ethical and sustainable investing to your friends and family, particularly in this period where everybody is so concerned with issues of this nature. Now, I'm likely to take a break over the holidays, so my next podcast might not be until January 15th, 2021. However, there's still a chance I will do one January 1st, but not for sure. So, stay tuned. All the very best. And though these are difficult times, I do hope you have a joyous and restful holiday. Bye for now. Learn how to create a simple portfolio reflecting your personal values by taking my 1-hour tutorial. Go to investingforthesoul.com/podcasts and click the link in the right-hand column for my DIY Ethical Sustainable Investing Pays tutorial. Now, I'll mention in the podcast if I have any direct interest or holdings in companies or securities I'm talking about. Furthermore, any news, opinions, analysis, or other information offered by myself, as well as references and information to or from other external sources in this podcast, is provided as general market information and should not be relied upon and thus does not constitute investment advice. Investors should consult their own licensed investment professional before making investments. Also, I will not accept liability for any loss or damage, including without limitation any loss of profit, which may arise directly or indirectly from use of or reliance on information in this podcast. Do contact me at ronr@investingforthesoul.com. Signing off, this is Ron Robbins.